Hi, I'm Tina White. In this video, I will shine a light on the truth about owner's pay. Spoiler alert, they're not the same. Business owners are often given the financial advice you cannot pay yourself through the payroll process. You'll need to pay a distribution from the profits. This leads people to believe owner's pay and profit are the same. The advice is true from a tax accounting standpoint. The IRS does not allow most legal entities to claim a tax deduction for owner's pay. This is a perfect example of how the advice is true, but it's from one financial viewpoint, and it hurts the business in other financial ways. This advice ignores other key financial viewpoints that you need to operate a financially healthy business. You need a way to see the true profitability of the business, where the owner's pay is considered a cost of doing business. That cost of doing business is considered when you calculate the profit, when you set the price, and you're also able to identify the cash flow needs of the company. So I'm going to dive into the rest of the story, how profit and owner's pay affect your finances as a whole, not just from a tax standpoint. First up, let's talk about what is profit. Let's make sure we're on the same page. When you're looking at a profit and loss statement, you'll see some of the key numbers that you need to make sure you can identify. Up at the top, we've got the top line, revenue, sales. All three of those are the exact same thing. And it's showing you how much did you actually generate in sales from your customers. Next up, we've got the cost of goods sold. That represents the expenses, the cost of delivering the services to your customers. In the middle, you've got the operating expenses or your overhead. And then down at the bottom, you've got the bottom line, net profit, net income. When you're looking at profit, it is an accounting concept based on the matching principle. It is simply a math formula, sales minus your expenses. Profit measures the company's ability to charge the right price and operate efficiently. It is not owner's pay, and it does not equal the amount of cash that you have in your bank account. Here's proof that profit is not the same as owner's pay or the cash balance, because we need that money to flow from the profit report over to the other items on the balance sheet that are cash flow requirements. We need money to actually pay the vendors on time. But notice how the amount we owe our vendors is the exact same amount as our bank account. We need to collect money from our customers so that way we can make sure the business does not run out of money. And did you notice that we have not paid income taxes yet either? Where will the money come from to pay the taxes? There are so many red flags on these reports. The bottom line is owner's pay and profit are not the same. There's so many other aspects of those two categories that have got to be considered. Here's a story that I've heard way too many times. Business owners look at their gross profit and they say, yay, this is pretty good, 50%. Then they look at the bottom line, 17%, still looking pretty good. They pat themselves on the back because they're beating the industry benchmarks. They celebrate in January by paying the owner. Finally, they're excited to pull some money out of the business. They even pay a bonus, and they decide to buy a new truck. April rolls around, your tax accountant calls and tells you that you owe $22,000. This is extremely painful information to hear when all the money is gone from the previous year, and it's possible that January through April was a slow season for you, so you're not generating a whole lot of cash right now. You're wondering, how will I pay the taxes? How on earth did this happen? So let's dive in. How did this happen? Well, first of all, you're looking at a financial report that's based on the tax return. It does not consider owner's pay or income taxes. Without these two key numbers, you're not able to compare to industry benchmarks, and the report generates a false sense of profitability. What you should be looking at is a financial report that includes owner's pay and income taxes. This is a true operational viewpoint that shows true profitability. Notice how over on the left you thought you were profitable, leading you to make a bunch of financial decisions, but in reality, after you consider all the cost of doing business, your bottom line is almost break even at only 1%. So if you had this new information back in January, what decisions would you have made differently? Well, you probably would have paid yourself some money, but probably less than what you actually did. You most likely would have not paid a bonus to your employees, and you would not have bought a new truck. This would have allowed you to have the money that you needed to pay the income taxes when they became due. You may be thinking, but my tax accountant said income taxes are not tax deductible, and I cannot pay myself through the payroll process. All of this is true from a tax financial viewpoint, but the key is you need financial reports based on the information you need to make financial decisions. So that way you can look at the finances from an operational viewpoint. Your business can create the operational reports that you need, and your tax accountant can make the tax adjustments that they need for the tax return. This is what it would look like. You would have an operational report that would show that top information, and then your tax accountant would make the adjustments to create the tax viewpoint. Notice how the bottom line of this report is showing taxable income. This is the number that the IRS needs to determine how much you owe in taxes. The number that you need is the net profit, the $4,000. This is the information that you and your team need, so that way you can see the true profitability of the company, so that way you can make financial decisions to improve efficiency and identify why the business is not as profitable as you planned it to be. So when you're thinking about owner's pay, it is the ability to pay the owner for the services that you provide to the company. I know that you wear a lot of hats, but what is your primary role? Do you generate the sales? If you do, what would be the base salary and the sales commission you would pay someone else to perform that same job? Do you actually deliver the service that you promise? What type of pay and benefits would you need to pay a technician to come in and take over those responsibilities? Do you lead the company as a manager? What type of pay and benefits would you need to attract a great manager that would have the same leadership style that you have? Also, you need to consider the owner's pay as a cost of doing business. It should be listed as an expense, separate line item on the operational financial report, so you can see true profitability. And then you also need to consider this cost of doing business in your prices. Owner's pay is not the same as profit, and it is definitely not equal to the amount of money you've got in your bank account. Keep in mind, your business generates money in only 3 ways. First, from investments from the owners. That's considered equity or capital that's contributed to the business. The second source of money is from loans from banks, and then sales from customers based on the price that you charge. Eventually, the money will run out from the first 2 options. The only way to guarantee you can sustain your business long term is based on the prices you charge. If you never consider the owner's pay and income taxes and the prices, where would the money come from when it's time to pay them? Waiting for the financial leftovers is a stressful way to operate your business. As you've seen in this training, you'll never get off the financial hamster wheel if you don't make a change. The key is to be more intentional with owner's pay. Include owner's pay in your prices and pay yourself on a regular basis, even though you cannot pay yourself through the payroll process. Record the payment as an expense so that way you can see true profitability on your operational financial report. You can rely on your tax accountant to make the adjustments that they need for your tax return. By learning the difference between profit and owner's pay, this is the quickest way to jump off the financial hamster wheel. Thank you so much for watching. Please subscribe, like, and share. I'll see you next time.